Hey everyone, Kevin here. So as you guys know, we've talked a lot on this channel about Palantir, and I'm not going to lie, this video is really meant for people that invest in the company. But it can be important for anybody to invest in any company, and that's on locked up shares. I've talked about the locked up shares on Palantir since before the company went public. It was a unique aspect of their direct listing. So up until this point, locked up shares for direct listings were pretty rare. In fact, direct listings overall tend to be more rare, although that could start to change now that there's been some rule changes on companies being able to raise capital. I'm looking at doing another video on that, so definitely stay tuned for that one. But for today, I just want to talk about what shares being locked up means, how that can be part of your strategy, and maybe you'll get a better idea of why we covered it on IPO this week, when we talk about all the companies with locked up shares expiring. So earlier in the year, when I did my first video on an IPO, and that was on Albertsons Companies, which really started the whole process of me doing more on IPOs, and to the point where we cover them all. But when that company went public, I had done a video on the IPO process, and if you haven't seen that, I'm going to link that one for you, because while it's applied to Albertsons Companies, it really has information that can be used on any company with an IPO. And there's just different things that you want to be aware of when you're investing in an IPO. I'm not going to go over all of that today, but what I want to do is talk a little bit about what locked up shares are, why they have them, and then give you some examples of some more familiar or some more popular companies that have had locked up shares expire and what that meant for the stock price. And again, this should be helpful, as we know with Palantir. We don't have that exact date yet. We really need to know when they're going to report their earnings for the fiscal year. We do know the fiscal year ended on December 31st. But once they decide on a date to actually report the earnings, we know just a few days after is when their locked up shares will expire. And for them, that's going to be 80% of all the shares, approximately 80% of all the shares. So we'll come back to that at the end. But let's start off with the basics, which is what is a lockup? And what it is companies, as most of you know, have private investors before they go public. And those investors tend to be your insiders, tend to be people that work for the company that, instead of giving some cash bonuses at different times, they're given equity into the company through these private shares. So when the company goes public, those people, again, whether they're the insiders, the founders, people that work for the company, or even some private investors, they sign an agreement saying they won't sell their shares for a period of time. A common number tends to be 180 days, so 6 months roughly. Now, what you will see when we talk about some of these examples is that some of the companies, they've made it a little trickier to follow these lockup agreements. So with Palantir, again, we know it's about 80%, so it's not a tiered approach to the lockups. So your question might be is, why do they even do this locked up agreements? So the idea with a lockup is to try to help stabilize the price of the shares. Because what could happen, barring any agreements or without any agreements, is that all the private investors could just sell all their shares, put them all in the market, see what they sell for, and there are people who think that's the way it should be done. And again, typically with direct listings, that's what it is, or what has been done. Again, with Palantir, it's very different in that they did lock up about 80% of their shares. So when you're talking about when that IPO actually happens, you're talking about usually new shares created for the purpose of going or selling them public. They're sold at a price that the underwriter gives, and then people will trade whatever the price they feel it's worth. By not having that huge glut of supply, those 80% of shares, again, it's a rough number, some companies more or less, but 80% of the shares that are locked up, that keeps the supply lower while the demand can be higher, and that can help elevate the price. And then over the next 6 months, between whether it's news that comes out or just to develop a history of the trading of the stock, could determine what the shares will trade for once the lockup happens. But keep in mind, when the expiration date comes and the lockup agreements expire, there is no guarantee that all investors are going to sell their shares. But you do want to keep a few things in mind. Number one is typically the investors of those shares bought them at a much cheaper price. So even if the company is trading below what the underwriter sets as the IPO price, the investor generally got that price cheaper. In a lot of cases, if it's employees, they were just sort of given it as, again, as a return of equity instead of getting a cash payout or a cash bonus. So in a lot of ways, there is an incentive probably most of the time for a person that was a private investor to finally get their shares being able to trade, which means that they can actually get that money, because those shares that get in the private market aren't easily accessible or easily tradable. And so people that have those shares tend to can't get the cash for them like they could in a more liquid public market setting. So when that lockup agreement expires, investors have that decision. Do they want to sell some of their shares, all their shares, or do they want to hold all their shares? And that could vary on a lot of different things. And again, I think when we get to some of the examples that we see, it might make sense when they might sell or when they might not. But at the end of the day, it's really going to come down to what the investor thinks about the company. And again, a lot of them tend to be insiders. So if by watching the action of the lockups expiring, we get an idea if the company is strong or people are just looking to sell. So for instance, 80% of the shares hit the market, and the vast majority, the insiders or the pre-IPO investors, decide they want to put their shares and try to sell them. That could indicate that they don't have faith that the company's going in the right direction, and they just want to get what they can get out of it. That could be a huge red flag for a company. Another thing could be is that time comes and maybe we see that there are relatively few shares being sold by those pre-IPO investors. Well, that could indicate that they see that the stock price has a future of going up for them, because maybe they have some information inside, some of that insider information that says the company is going to do well, they're going to be blowing out of the water, and we want to stay in because we think that the value of our share can even continue to go higher. So again, what happens a little bit on the expiration date can give you an idea of what the stock will do in the future. Now, keep in mind that the share price will often drop going into the expiration date, because again, the people that did buy shares at the IPO or buy them on the public market that are not subject to the lockup agreement, they can sell anytime. But they also know that when that lockup expiration date is coming, that there's going to be pressure on people potentially selling, which will drive the price down. Again, more supply of shares, demand maybe stays the same, it's going to bring the price down. So people will often, in anticipation of a lockup expiration, start to sell beforehand. That's one of the reasons why I want to make this video now, particularly for you Palantir investors, because we expect that their earnings release will probably be sometime in early to mid-February. So we're expecting that the expiration will hit at some point in mid-February. So getting about a month and a half head start just to start thinking about this, I feel will be helpful for you guys. And so that's why we're doing this. And again, looking at some of the other companies, I think will help give you a better idea of why I think it's important for us to understand that. So at this point, let's take a look at some companies that have had some lockups and see how that goes. So one of the biggest ones, and I've talked about this a little bit on some of the live streams, or at least one of them, was Beyond Meat. And so on your screen, you can see I have right now, this is the trading of the stock since it went public. And what you can look at here is how Beyond Meat went. So it came out in the spring of 2019, through the summer went way up. And at this point, I did not buy into Beyond Meat. I was like, this is insane. While I liked what they did and I was interested in them because they were the biggest, or really the only public trading option in the alternative meat industry, which I felt was going to be an area to grow, I wasn't going to pay this type of price for it. So it goes up, as you can see, it peaks up into the $200 range. Then it starts to come down. Now, keep in mind with these charts, when we look at all these companies, there's going to be plenty of news that really helps determine, what stocks are going up and down. So just keep in mind, lockups are not everything. But just looking at the trend, if you're looking at this Beyond Meat chart and you've never looked at them before, it's really easy to see where the lockup expiration happened. And you could say, well, is it when it started going down? No, it's not there. If you're looking down here and you're looking at, again, the volume, and you can look at the volume on the screen here, they're pretty low. It's in the single-digit millions. But when you get to the very end of October, that's the lockup that happened. It expired and the share price dropped huge. Okay, and so where you started off for trade, again, this isn't the IPO price, but it opened at $46, peaked somewhere, again, these are just closing, so this isn't even the all-time highs or whatnot, just where it closed on each day. You can see on this one it closed around 230 almost $235. By the time as we're going into the expiration, you can start to see there's really a focus as people, the investors that have bought stock publicly, start thinking, let's capture some gains. Stock has really went high, depending when they bought it. Now, of course, if they bought it up here at 235-ish, they may think this isn't the time to sell unless they're really concerned about it. But we start hitting October, it really starts to see a sell-off. So it's not to say, again, that's not any news that's helped drive that, but it's just indicated that there's a lockup. That's just another factor out there to consider. And as we get down to the low point, so again, when we got to the lockup expiring on October 29th, you can see on the 28th, it closed at $105. By the end of the 29th, which was the day the lockup expired, it closed $20 less at $81, almost $82. So the point of it is if you believe in Beyond Meat, you know, in the long run, maybe you hang in there. But do you want to buy stock that's heading into the lockup expiration when you know that there's a trend that it could go down? And as you can see, it stayed low for a while. Started in January to start getting an uptick. And from what I remember, and at this point, I was still watching. I was ready to buy, but I didn't at that point. And this is the news of a potential partnership with McDonald's came up, and I thought, oh, I missed the opportunity. So obviously, we all got opportunities this year because of the pandemic, and I ended up getting it somewhere into the low $80 range. Okay, and now that's thinking we're at lows because of the pandemic. There's no lockup expirations to worry about at this point. Now, in my mind, I was thinking this isn't a company I want to hold for too long because there's more competition. It's going to push the margins. They have the private Impossible Meat company out there that a lot of people believe has a superior product. I'm not here to debate one way or the other. But there are other companies that are coming further along in the process as well. So it wasn't a company I wanted to hold forever. So in my mind, I put myself as a target of $125, which I ended up getting within a couple of months, and then I sold. You could argue, should I have kept it longer? Yeah, but at the end of the day, you know, I made my money in a short period of time. And if you look, when I scroll over here, the price has tended to be really close to where I thought the company probably should be valued at. It's been in that $120, $130 range. So that doesn't mean I was perfect on this. Again, I missed out on an opportunity to get even more money from it. But again, just knowing the lockup expirations and realize I'm not buying it until it hits there, it helped me make money and not potentially lose it, which was the concern. So let's go to another company. Let's take a look at Uber. So again, a very popular company. Everybody knows, retail investors know a lot. And again, you can see this is throughout the company back in May of 2019 goes public, and you can see the price, what's happening. It, you know, does its typical IPO. It's up, not crazy up, but it starts to drop. And again, without digging into every little part of the news, you start to see some trends where the price is going down. And again, just as a question, could you guess without knowing anything by looking at this chart, when does the lockup expiration happen? And again, if you just follow the volume and you see this big red line, so then you see the day, it's 11/6. And you can see again the stock a few days before that starts going down. So that's the trend. There's some, you know, going up a little bit, going on, but the trend really had been going down anyways. And you hit, people sees what happened. All the shares are out there now. The stock, again, maybe not the best way to look at this because this chart is obviously there's a pandemic involved here, so that hit it. Now the recovery fairly quick. Could it have kept going to this high levels before the expirations happened? Is very possible, and they have since exceeded it. The point that I would say with Uber, though, is, again, if you're somebody that looks up the lockup expirations, if you see that the stock is going down into, you know that that's a pressure. You know it's pressuring the stock word negatively. There could be other things happening that could be good, negative, whatever. So this isn't the only thing, but it is a factor. So when you consider when you're going to invest, do you want to invest when it's going down to the lockup? Now, there's a chance that it could immediately recover. There's always that chance, but there's usually still that time there's a discount. So why wouldn't you want to buy it closer to the discount than buying it way up at the tops a couple months before when you know this is coming? And this has sort of been the thing that I've talked about with Palantir. We know it's coming, and the price now has sort of spiked at one point where it basically was triple of where it started trading, and really was at that same price for a long time. It comes down, and we know in the next couple of months, month and a half or so, we're going to be dealing with a lockup expiration. So let's go to another one. This one is Snowflake. Now Snowflake is unique because this isn't your full lockup expiration happening. It's a company that everybody knows this year. It was probably the most hyped IPO of the year. And what we can see from this chart is it came out on the 16th. We all know the story. The IPO price was like $120. It came out double than that, and then it traded as high as over $300 on that first day. But looking at the chart of where we are, they had a different type of a lockup. So this was not your total lockup expiration that happened. They had an opportunity where lockups expired for about 25% of the shares. And again, if you're looking at this chart, can you tell where it is? Without knowing, you can look at it and say December 15th, and you're right. And what do you see happening on those few days before the lockup expires? It is peaking. Again, these are just closes. It was as high as over $400. You can see on the chart here, it was as high as $429 that day. If you bought it at the top, you're buying this a week before 25% of the shares that have not been able to be traded are now available. It's sort of expected what's going to happen in that the stock starts to go down. Now, it hits the number of, let's see, it closed on the day of the expiration at $328. So you're talking about a $100 difference in a week. That would probably make you sick. Now, there was a little bit of a recovery because, again, people look at the price and think, okay, this is an opportunity to buy. But at this point, the stock is still dropping. And you start to question, again, what are the factors in there? There's potential news that's happened, people looking at valuations, you're hearing analyst reports, all that kind of stuff's out there. But what we also know is there's more locked up shares going to come out. And when that happens, your opportunity for seeing more downward pressures happening. So let's go to another one. This is JFrog. JFrog, very similar to Snowflake, came out hot, like a lot of tech companies did this year. And like Snowflake, it also had an early expiration lockup period. So again, it's almost becoming like it's really hard as investors to keep an eye on this because there's different ways to let lockups expire. And I think in probably a lot of ways it's good because at different times it's going to probably help mute the volatility a little bit, but it makes it harder as an investor to know what days to keep on. So if you're investing in a company, particularly a new company, or a new public company, you want to keep an idea when lockups are going to happen. So again, looking at JFrog, so that volume on the first day goes up, and it's looking pretty good. There's some things again, but still well over that first day of trading. Starts to come down. Now, one of the reasons we know it started to come down here is because the criteria for some of the shares being able to end the lockup expiration or to come out early was hit, and they reported on this. And then you start seeing, and that was at the end of October, remember, because watching it, price starts to go down. Gets to a really low level compared to whatever traded for publicly. Again, still a higher than the IPO price, but lower than where it's traded. People look at its opportunity, it bounces up. And then, once again, you can start to see by the little red, a little higher, that this ends up being where the lockup expiration was. Now, what's notable here is, as the price is lower than where it traded open initially is, after the expiration, the stock actually went up. So that's a good sign. It had an initial bounce, and then it sort of hovered there for the last month or so. And again, the pressure is still down because, as we know, there's more lockup shares coming out. So something to keep in mind with JFrog. Another company, and this is a really recent one, this is Lemonade. And most people would tell you Lemonade was a very successful IPO this year. So Lemonade came out earlier in the summer, and this is actually before I was covering all the IPOs, so we didn't cover them on the channel at that point. But you can see they came out pretty strong. And again, everybody thinks this is the company. It's going to be one of the great companies. It's done well this year. But look at it. Really, from July 20th on, it was down. And again, could be earning reports, could be news, whatnot. I'm not digging into all that. We just want to look at one of the factors, which is locked up shares. And what we know is that there was an early lockup expiration, and that was on the 12th. And again, you can sort of guesstimate right when that's going to happen. But look at this compared to some of the other lockups that we've seen. So again, going back to Beyond Meat, we saw when the lockup hit, big red line here. For Lemonade, that's not the case. It's very small. And so what happened is investors sort of took that as a sign for it's a go. You know, we talked about this, insiders don't sell other shares. That could be a sign that they believe in the company and it's good to go forward. Again, this wasn't all the shares that being available. It was 33% of them. So it's a significant amount. So they all didn't sell off. And a reason why that may not have happened is because it's selling. That expiration was below where it was trading from that first day. So even though the price had traded lower, it's still near their all-time lows. Investors saw what happened, did not completely tank. People started buying again. But there's another zig to the zag. And guess what happened here? Another lockup expiration. Looking at the chart, can you figure out what day it is? Again, look for that high red line. And look for where it came down. So again, this does not mean in the long run that Lemonade is not a good company to invest in, that it was a mistake to buy here. But when you buy right before an expiration is going to happen, you're putting yourself at risk. And so it had closed here on the 23rd at $134. The day of the expiration on the 28th, $107. So again, you're talking a pretty substantial decline in one day. So the question could be like, why does this happen? Why are people buying going into the expiration? Well, there's a couple reasons. One is many people that are new investors don't consider the lockup expiration. The second is there are times, and again, we'd like to believe everybody does the right thing, but when information comes out that can actually elevate a stock or pump it up, if you want to call it that. And so there's a lot of times there's timed information that comes out that allows the stock to trade higher, pushes the stock up. Where the people in the know, once they have the option to sell, then they sell and they make their money. Or there's the option where the people that are in the know, they know the expirations happen and know there's an opportunity as more supply is going to hit the market that they can sell here and then buy back in at a lower price. So again, just another reason to consider about the lockup expirations and using it as a strategy. And again, I'll say it again, this is why we cover it on the IPO this week. All right, let's go to another one. Let's talk about one that company had an IPO this year that wasn't successful, and this will be Albertsons. And again, this is that first company that we talked about as an IPO on the channel. And it had, again, let's just look at the chart. And it's a little different. So their lockup was a 180-day lockup. You see that where they started trading, they actually traded and closed below their IPO price of $16, which was the downsized IPO. They traded lower, and for much of the summer into the fall, they were below that $16 threshold. So where the underwriters had the stock priced, people were trading below that. And there's a lot of reasons. We talked about this before. Supermarket's not a high margin industry. Albertsons had a significant amount of debt. So again, a lot of concerns, but there's also this understanding that there's a lockup expiration coming. Their lockup expired on the 23rd. It's not as easy to see that on here. Now, there you see a little red line, but look compared to these other lines. Well, for Albertsons, who did not have that huge pop, the stock did not sell off. This was a go signal for people that have been following the company. Remember, the underwriters think this company is worth $16 a share as of the summer. Earnings have been fairly positive from them. The news that's come out on Albertsons has been pretty positive. Now, in this area here, they did have a secondary offer, which did lower the price. But again, overall, people focusing on lockup expirations, knowing how to trade them, sees that it goes down, sees that the bottom does not fall out, and then they move forward, and now the stock is at its all-time high. Another company with a recent IPO, which had a fairly early lockup expiration, was FuboTV. And as you see with Fubo, they've, and I've heard about, they've went crazy here in this month. And so looking what they're doing from early October, prices up, but not substantially. And then it has this rocket part. So again, lots of people just jumping in and not sure there was really any legitimate good reason to do it. Well, what happens? Well, there's a lockup expiring coming, and it's coming on the 30th. And as you can see here, people are being prepared for it. Now, there's already talk that this stock is way overvalued. For this company. So you could say that that's part of this valuation, gone up way too fast, too quickly, and now again you have more shares hitting the market. It's going to pressure the stock, and look what happened. So again, if you bought here at $62, you basically lost half of your value, or almost half of your value, in just a week. So you have to understand these lockup expirations. So let's bring this all back to Palantir. So let's see where Palantir is. So Palantir, and so many of you guys follow them on the channel, that's why we talk a lot about them, is that it stayed pretty steady right around where it started trading, around the $10 mark, right until they started to be able to have some market research come out. So one of the other things we talk about in IPO this week, for notable companies, we don't do this in every single one, but this is when the quiet period ends. And again, for more information on the quiet period and lockup expirations, definitely check out that Albertsons IPO process video I mentioned earlier. Talks a little bit more about that. But you can see there was news, and we've talked about what this news is that helped drive the price. But the stock, in my opinion, I always say this, went up too high, too quickly. And where we know, and again, these are just the closing days, we know it's gone as high as into the like $33 or so range. But the price has sort of pulled back, and now we're starting to see a little bit of a trend. We're seeing some peaks, and we're starting to come down. And the question is, what has changed for the company? And the thing to keep in mind is, with Palantir, is we know there's a lot of shares that's going to hit the market in about a month and a half. And so for you guys, you want to keep this in mind. This does not mean that Palantir is not a good company, that you shouldn't invest in them. But you might want to consider, if you bought in here, if you bought them lower, if you bought them at in this first few weeks, you're probably insulated from a drop that's going to take it down to here. But as we saw from the other companies, there's pressure to push this stock down. And I just don't want you guys to be buying at a high level. And this is what I've been saying on some previous videos. And again, I probably had my highest amount of dislikes and negative comments on these videos. But it's just because you have to consider that while the company could be good and you love it, and there's 1,000 YouTube creators, and there's 1,000 YouTubers out there really hyping the stock. Those kind of things are similar to analysts, where they can drive up a price, or the release of news that can drive up a price, and then the sell-off comes. So this is not saying you shouldn't buy Palantir. And if you believe in the company, you want to buy it, you're buying at a little bit of a discount already. It's about a third of, less than where you could have bought it in November. But just know that, yes, there's an earnings report that's going to happen. We do expect, I expect that the earnings are going to be fairly positive. But we also know that there's a lot of shares going to be hitting the market. And what's that going to do with the price? And again, there's no rhyme or reason to what will happen, as we've seen in some of the other companies. But what we've noticed is that when a company is really high from where it started to trade, so when the people that had shares in the private markets are able to share, those are the ones that tend to sell off versus the one that tends to be closer to where the stock was actually trading at. Again, a lot of those people see that there's going to be an uptick in their stock price, so they're going to hold. But when they're talking about stock price that's more than doubled, tripled from where the stock started to trade, then there's an opportunity for them to sell and make some money. So anyways, just wanted to share some information on what lockups can mean for Palantir. All right, so there's some examples for you to consider when we talk about locked up shares, and give you a little idea what locked up shares are. Again, you can do a lot more reading, and we can talk more about it if there's a lot of interest. You gotta let me know in the comments about locked up shares and expirations. But again, if you have not seen that first video, that Albertsons IPO process video, check that out. See how we applied it to them. And you know, look at this information. Again, this is not telling you to buy or sell Palantir or any company. It's just telling you to be familiar with the process. Know when everything seems great, it could not be. So again, the news is coming out, but you may not be aware of a lockup expiration. You're probably going to face the pressure where you're going to lose money, at least in the short term. Now, in the long term, you could be just fine. But a lot of people don't like being in the red for very long. So what you could say is, how do I know if the stock will go up or down? And the answer, again, is you just don't. Again, these examples just sort of give you an idea what tends to happen. Let's say Palantir is trading at a number, the lockup happens, and remember, the shares will probably start, the share price will probably start to go down before that actual expiration date. People will be preparing for it. But let's say that the lockup happens and the shares price doesn't drop much. It actually goes up. I don't want anybody to be mad at me and saying like, well, you know, you told me to something, because that's not what I'm telling you. I'm not telling you what to do one way or the other. But what I would tell you is, so let's say the price does go up. You can feel more confident in the company's stock at that point, that people that have had the shares as insiders or pre-IPO investors, they feel that there's more value coming up in the company. So yeah, you're paying a little bit more, but you've taken some of the risk off the table, because those locked up shares, that potential for all of those pre-IPO investors to sell has passed. They either didn't or they didn't do it in a significant amount. The share price is held, and that gives you more of a green light that you can move forward. Again, if you're solid on Palantir at the price and you believe in the company in the future. So anyways, you have to tell me what you guys think. Always let me know with a comment. If you enjoyed the video, you know, whether you agreed or disagreed maybe with what I said, definitely give me a like. It really helps me with YouTube, and it helps grow the community. And as the community gets bigger, of course, there's more people to share ideas with and hear more information from. So definitely want to help continue to grow the channel into 2021. And again, if you are new here and you have not subscribed to the channel, I hope you consider subscribing. It's totally free. We talk about all the companies going public. We talk about locked up shares, when they're going to happen. We talk about you know, quiet periods ending. We talk about all the information that comes out. We tend to focus a lot on giving you the facts of the companies, but then I'll also share some opinions here and there, and I always let you know when those are. But at the end of the day, it's no pressure. You either buy or sell, but you do it because you want to, because you're getting the information, not because I'm trying to tell you to buy or sell anything. So with that, I'm going to wrap it here for now. Thank you for watching, and until next time, have a great day.